Hello, everyone. Welcome back to another week of exploring the Forex market through the lens of price action based technical analysis. In today's episode, we will be taking a closer look at the GBPUSD market structure and analyzing whether the pound sterling can take advantage of the less attractive US dollar in the upcoming week, especially after the first chairman's suggestion of stable interest rates. In this video, we will conduct a comprehensive analysis of the current market conditions using simple yet effective tools such as trend lines, key levels, and chart patterns. By examining the historical price movement within the cable market, we aim to gain valuable insights. Before we proceed, it's important to note that this video is for educational purposes only and should not be considered as financial advice. My objective is to empower you with insight into the GBPUSD chart and enhance your proficiency in price action analysis. Forex trading carries inherent risk, so always proceed with caution and consider consulting a professional financial advisor before making any investment decisions. Now, without further delay, let's dive right into the business and uncover the potential opportunities in the GBP USD market. So we'll begin by dissecting the daily time frame to gain a deeper understanding of the market psychology. So I have taken into consideration almost a year's worth of trading activities starting from November of last year. By analyzing this data, we can better decipher the underlying factors driving the price movement in this market from a technical standpoint. Now, from last year's December, there is one key area that we are going to be taking into consideration, and that is that area between the 1.200 and the $1.1800 zone. If you look at the structure closely since last year November, you will see how this level had played a major role in pushing price to the upside. So what this simply means here is that as soon as price got into this area, we saw how it became difficult for sellers to break down the structure to push price downside. And as a result of this, I want to consider this area as a robust demand zone, which could become a platform for another wave of bullish momentum. So to make things a little bit easier for us to capitalize on trading opportunities, we have a key level at the 1.200 area, which I will consider to be a psychological level considering the round figure of that price. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we have no other choice than to continue to look out for patterns and structures that support the idea of buying that asset. Now, in addition to that, if we zoom into this current structure and taking into consideration what has been going on here since the month of July, you'll see that after price action testing a new high at the 1.3140 area, we saw price nosedive to the downside and along the line consistently and uniformly found lower highs. And after connecting the series of lower highs, we have this beautiful descending trend line to work with at this point in time. Now let's zoom into what has been going on here in the last couple of weeks. In fact, we can see here that price action has been caught within the zone around the 1.23150 and that key level at the 1.2 area, giving us an insight into the level of indecision in this market. Now, with the way things are going right now, it is quite clear that the platform around the 1.2 area, which we identified as our demand zone, is becoming difficult for sellers to break through. As if you look at what happened since the beginning of this month, the lowest point price action has been for this month was around this area at the 1.21 level, and in fact during the course of last week it was more of a consolidation phase as all attempts by the sellers to break down the previous low appeared to be negated by buyers, giving us another higher low. And from a technical standpoint, when we notice higher lows in the market, it's more or less a sign that buyers are gradually gaining momentum. And if you look at this structure closely, considering the impulsive move that brought us to this point, it appears that price action is gradually transitioning into what may look like a reversal pattern in the form of a double bottom structure, where the 1.23150 area is going to be serving as the neckline of that pattern. However, this is yet to be formed, as we will need price action to even come closer and break out of the 1.23150 to validate this reversal pattern. However, I'm of the opinion that we might likely be seeing a reversal setup, and in fact we could join the momentum even before the breakout of that neckline happens. And how are we going to be doing that? Well, I was able to identify a simple setup that we are going to be using on a lower time frame to guide our trading decisions for this week. However, before we go into the lower time frame, it is very, very important for us to be aware of the upcoming economic events that could significantly impact the current market conditions. And these events act as a pivotal point shaping market sentiment and, of course, influencing price movement. And this is where the economic calendar comes into play. Of course, we know by now that these fundamental factors often manifest on the chart in technical patterns and price movement, and by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So on the economic calendar for this week, we usually focus on high impact events from both economic dockets that will be affecting these assets, which includes the United Kingdom and the United States economic dockets. Now, the first series of high impact event will be coming in on Tuesday, that's October 24, and in fact we have a handful right here. Now we have the claimant count change, the employment change, the ILO unemployment rate, and the S&P Global publications, which will be coming in from the United Kingdom. And later that day, we are going to be seeing S&P publication also coming in from the United States. Then on Thursday, October 26, we have the gross domestic product annualized for Quarter 3 from the United States economic docket. In fact, this is one event that everyone will be looking forward to, as it provides insight into the overall health of the U.S. economy. Then on Friday, October 27, we have the core personal consumption expenditure, which measures inflation by excluding volatile food and energy prices, and of course offering insight into the overall price trend. So these are the events we are going to be looking forward to, and of course, as technical traders, we do know that the anticipation of this event alone has a tendency of influencing the market sentiments. Now, talking about price action, let's scale down into the 4 hours time frame. Now, on the 4 hours time frame, like I said on the daily, we are going to be focusing on that area between the 1.23150 and the 1.200 area, which of course is serving as a consolidation phase, which of course emphasizes the indecision in this market. So now I'm having a temporary zone around the 1.2100 and the 1.205 area, as you will see here. Then in addition to that is the descending trend line here, As you will see, price had consistently respected that, pushing price to the downside, of course. Now remember our neckline, which was identified at the 1.23150 on the daily time frame, where we agreed that we are waiting for the breakout of that structure to capitalize on that uptrend move. However, price action is just right up below the 1.218 and just right above that temporary demand zone. And one interesting thing about the structure is how the 1.21800 area here shares a beautiful confluence with that descending trend line we have here. So in preparation for next week and considering the fact that price still sits above a strong and robust demand zone, a breakout of both the descending trend line and the 1.218 will be a beautiful signal to join an uptrend move. In fact, price action breaking out of that descending trend line will be the first time it will break out of that structure, and also give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, after which we can now add more positions when price break out of that neckline to maximize the potential of this bullish move. So on the GBPUSD today, based on the technical structure here, I'm looking forward to buying opportunities. However, in as much as we're looking out for buying potential, remember how we do it in this community, we also want to keep tabs with the potentials the sellers also have. And considering the fact that price has been very bearish for a long time, we might likely be seeing selling opportunity coming into as well. Now, what is it that we want to see on this chart that will make us feel comfortable changing our bias from bullish to bearish? Now, the first thing I would like us to see here is price breaking down both this temporary zone and our key level at the 1.21 area. Remember, this zone here had played a major role for buying pressure. So in fact, a slice through of the structure and retest will be all we need to be part of a downtrend scenario. So I will be pausing the video here at this juncture, but trust me, I will be with you in the comment section on Monday morning after monitoring how participants in the market will be reacting to the structure around the 1.218 and of course the descending trend line to give us a clue into what direction we shall be going. I hope this video has been of immense help in making your independent trading decision for this week, and if it truly did, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial to them too. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.